When does a private limited company need to register under the Goods and Services Tax in India? This question, dear viewers, is not just a regulatory detail, but a vital aspect of doing business in India. A private limited company is required to register under GST if it meets certain conditions. Understanding these conditions is key to ensuring your business operations are compliant with the law. The first condition is that of threshold turnover. If your company's aggregate turnover exceeds 40 lakh rupees for regular states and 10 lakh rupees for special category states, GST registration becomes a compulsion. This aggregate turnover includes the value of all taxable supplies, exports, and more. So it's important to keep a tab on your turnover. The second condition is interstate supply. If your company is involved in interstate taxable supply of goods or services, regardless of whether your turnover meets the threshold or not, you have to register for GST. In simpler terms, if your business operates across state borders, GST registration is a requisite. The third condition applies to e-commerce operators. If your private limited company is involved in selling goods or services through e-commerce platforms, you need to register under GST irrespective of your turnover value. Whether your business is predominantly online or offline doesn't matter when it comes to GST registration. The final condition is for those who are input service distributors. If your company is involved in distributing input tax credit, you are obliged to register under GST irrespective of your turnover. So these are the various scenarios where a private limited company in India needs to register under the Goods and Services Tax Act. Remember, registering on time and complying with GST rules is crucial to prevent penalties and legal complications. This wraps up our discussion on GST registration for private limited companies in India. Subscribe for more business tips and stay ahead in your business game. Until next time, thank you for watching.